Hey guys, thank you for tuning in to another episode of Ryan Makes Sense, where we talk about personal finance, investing, and chart analysis. Today, I want to share with you guys a special batch of microcap companies that are poised to do really well within the next 1 to 10 years. So I've set up a screener, or I've set some parameters that we're going to look for. Number one, these companies took advantage of the higher prices in the stock market in 2021. They were able to bring some of the investments back from the investors, from the customers, retail investors, hedge funds, etc. They took money back into their business to expand, whether it's adding a new building, increasing production, adding a sales team, marketing team, buying new equipment, etc. So they have a bunch of cash currently. They have little to no debt. They have institutional ownership over 10%, and that is very important because just like Enphase, Amazon, Digital Turbine, AMD, Tesla, you name it, Nvidia, these all at one point were microcap companies. The difference between looking for microcap companies in a haystack is these special microcap companies have institutions already holding over 10% worth of the company. So that's pretty exciting. Again, these are going to have little to no debt. They have cash. They've been around for more than 10 years, which is perfect. Ideally, these companies are disrupting legacy products. So what I mean, let's look at Enphase or Tesla for an example. Enphase was dealing with inverters, huge bulky systems on walls, and they disrupted the industry by creating microinverters, which go under solar panels or other renewable energy products. Tesla, they disrupted the vehicle market, their electric vehicles compared to gas, so on and so forth. Amazon, Netflix, Blockbuster, you get where I'm going. So many great things. Let's go ahead and build our screener and check these companies out. All right, so here is Finviz, one of the best sites in the world. We are going to set up our screener here to basically look at everything I just mentioned to you guys. So we want to look for micro cap companies, which is going to be under the market cap selection. And next we are going to remove any dividend paying stocks because we do not need dividend paying stocks here. Next, we are going to look at a quick ratio of 4. This means that the company has cash. And we're also going to turn the current ratio to 4 plus as well. This has to deal with assets and liabilities. We always want companies with more assets than liabilities. Never forget that. Long-term debt is going to be really low. We're going to put under 0.05 here. And we're going to do the same thing for the debt to equity. Under 0.5. And next is gross margins and EPS growth this year. EPS growth this year, we want positive. And we want gross margins to be really high, really, really high, over 40%. We also want to make sure that these companies are optionable and shortable. And we want the shares outstanding and the shares float to be under 100 million. And the float, and the IPO date as well, under 100 million. IPO date is more than 10 years ago. And institutions own 10%. That is the sweet spot here. Institutions kind of have a head start here. Over 10% ownership. So now we have our list of stocks. I'm just going to go ahead and scroll down. There are 12 stocks that we can see right here that are potentially worth investing in, and we want to look for disruptors of legacy products. So with that, let's start diving in individually. Okay, so the first one we're gonna look at is ticker symbol ACTG. I'm just gonna open the first 4 in new tabs here to just save us some time and let those puppies load. So we also want to make sure they have sales and, just checking for any other potential red flags. We do not want any speculative biotech companies. So the first one is, where is it? Acacia Research Corporation. Let's look at sales. 109 million. There is shares float of about 41, 43 million. Just kind of based on that, should be around $2-ish. But they also have income. I did not incorporate that. So let's do some quick math here. Ooh, and their quick ratio is 5. So we are going to count that cash as well. So sales of 109.4 plus 65.4. Whoops. Plus 0.4. And now let's add that cash that they have. $57 million in cash. Okay, so let's add that as well. Plus 57. So this is all in millions, but just kind of shortened / summarized. And then we're going to divide it by the total shares outstanding. This is going to be our conservative price. So around a $5 stock is what we're looking at here. And this is kind of just basing it off, okay, this company makes X, there's this many shares available. How much do you want to sell those for? And it breaks down to about $5 a share. It is currently in a downward channel potential wedge. I'm not sure. Let's see. It's definitely bottoming. It's seeing the same levels that it's been at since 2016. I'm gonna go ahead and open Thinkorswim really quick. And so within Thinkorswim, I just want to look at the chart a little bit more closely. So we were able to get ACTG, Acacia Research Group Company, whatever, open in Thinkorswim. And it looks pretty bearish and not very appetizing at the moment. We can see here we have one peak, another peak, and then another peak down here. It kind of, in terms of cycles and patterns, it kind of feels like we are back to square one over here. And it looks like it has years before it starts another bull run. And additionally, I did want to point out, we want to look at companies that are disruptors. And just looking at this total revenue, we could see in 2018 they brought in 131 million. 2019, 11 million and a quarter. And then they haven't reported 2020 or 2021 or 2022. So we are going to dismiss this stock, unfortunately, and kind of just reading through the stuff on the side here. The CEO had to resign due to misconduct. So again, this doesn't fit the bill for solid companies. We want strong CEOs. So this next one we're looking at is ticker symbol AWRE. This is going to be AWRE Software, technology software company. Let's just look at the monthly chart to just kind of see what we're looking at here. I'm a very visual person, but I also do want to look at sales and everything else. So looking at sales, they only make 15 million, which is not a whole lot. They have no debt. They have quite a bit of cash here, it appears. Guidance next year is negatively down. Insiders are purchasing. Institutions own 33% of the company. Shares float is under 100 million. Gross margin 92.5%. That's insane. Looking at this chart, it looks like a huge market cycle is kind of ending. We have this rounding effect. So this looks kind of prime. I'm not a big fan of 15 million in sales, losing a little bit of money here. So that's about 14.7 million in sales with shares available being 12. So this fairly priced is around $1, which is fine. We've seen AMD, we've seen Enphase, we've seen Digital Turbine all go under $1 or less. We've seen Renesola under $1 or less to then rise over 1,000, 10,000%. So price here is not a concern until we start diving in a little more. So let's just go down and look at these insider buys and look at the balance sheet and income statement. Okay, so first thing to call out is that they are current on their financial reporting. 2020, they brought in 11 million. 2021, they brought in 16, almost 17 million. 2022, it looks like they brought in about 16 million. That should be confirmed here in the quarter 1 earnings, which I'm not sure when they're coming out. It looks like I mean, look at those gross margins. They pay 1 million to earn 16 million almost. So that's pretty good. Again, it looks like gross profit was rising until maybe this year. Maybe that's something to look into. Net income, this is really juicy. Net income is steepingly, it is steepingly decreasing. So from negative 7.6 to negative 5.8, now negative 1.2. That's improvement, if you ask me. No sellers. No sellers. The biggest buys are coming from the director, 364 million at $1.63. Current stock price is $1.75. Darn it. I thought we were going to be able to get a premium there. Okay, this looks good. Let's see what the company does. So they're a biometric software products and solutions globally. Biometric software products. Okay, this is good. This is really good. Okay, in addition, it offers program management. This is awesome. This is great. This is, in terms of disruption, are they disrupting a security solutions industry? Maybe. I mean, at these prices, they're a wonderful acquisition target. Let's finish up down here, and then we'll take a look at the website to see if it actually looks kind of cool or if it's looking like it's from the 90s or something. So just going down here, oh, they are decreasing operating expenses. That is smart. Good for them. Okay, let's look at their balance sheet. Okay, they have 29 million in cash. That's more than they make in a year. So cash is slowly going down, and assets are slowly going down as well. It looks like plant property is up, so they're investing more into the business, it looks like. Their goodwill is up, and intangible assets are up as well. So their total assets is 48 million, and total liabilities is 6.8 million. That is amazing. That's almost like a 8x assets dwarf liabilities 8 times, which is awesome. Almost. I mean, I'm just doing some quick math in my head. Could be a little less or a little more. Full-time employees, 90 down to 81. Okay, number of common shareholders, kind of in the same area. Nobody is selling the stock. It's kind of cool. I just want to see how many shares they own. So the director, John Staffords, owns 5 million shares. Okay. Where's the CEO? Chief Technical Officer, 42,000. Where's the CEO? CEO only owns 250,000, give or take. CFO is buying and owns about 54,000. CEO and president, yep, this is old. So yeah, the director, John Staffords, really believes in this company. That could be an area of a deep dive. Maybe look into his history. What does he know? I don't know. Has he been in the press or anything for positive things. I think that would be good to know. Now we're just taking a peek at the website just to see how it looks. Okay. Um, just doing some quick call outs. Their website up here, they have a SSL. They care about online security. That is great. Let's just look. Let's look at their careers to see if they're hiring or expanding. Just gonna look in a new tab. So it looks like they're in 20 plus countries, 100 commercial leaders, 80 government agencies. One government contract could be huge if they're selected for a large job. Bunch of awards, good for them. Biometric framework, okay. Just going down. This is pretty cool. Careers looks kind of their page looks a little outdated. They have their positions based on buttons instead of like a list. So they're hiring for 3 roles. So this company is really small. Sorry, I keep leaving my bubble. I kind of like it. They have no debt. So the only time this company is going to go down is when it's being manipulated. Um, let's look at this in Thinkorswim as well, just to see. This is getting down to some really good prices. AWRE. Look at this. Okay. It just bounced off of the lowest support. That goes all the way back to 2003. This is a 10-year support. Every time it has touched the 10-year support, you can still see my screen. Every time it has touched the 10-year support, it has gone up at least right here. Let me just make this very clear. It's gone to here. It's gone here. It's gone here. So literally from $1.50 to $6.69. It's done that 3 times. Well, I'm sorry. Yep, it's done it 3 times. I lied. It's done it twice. It's done it here, and it's done it here. And now it's back down here. This is amazing. I love this. I'm gonna put this on my Robinhood watch list, and I'm likely gonna buy this next week. I'm excited. Um, I don't think there's any reason why the stock should be down here. Let's look a little bit more at momentum. And I do apologize, we are spending a lot of time on this stock, but I think this is great value. I think we potentially may have found a really good company. Okay. Again, we're just gonna look. Just gonna squish things a little bit. It's gonna look a little messy, and I again apologize for that, but try and make it as clear as possible for everybody. So let's just look at some key metrics really quick. All right, let's look at some key metrics really quick. So we can see right here, we had the momentum. It's kind of not showing, which is intentional. Let me bring it up. So we had this huge downtrend right here that eventually rode its way back up. Downtrend here that led us back to the top up here. We had a downtrend right here for about, it looks like December 2012 all the way to about March 2016, 3-year downtrend. And then we had another long downtrend here So after this 3-year downtrend, it went up to our 660 target. And then it started another, is this 3 years? Let's see, it's June 2017 to about October 2019. So 2 years, 4 months. And then over here, look at this. Momentum turning. And let me look, I just want to look at the yearly, because if we get a yearly momentum turn as well, okay, we're not. The momentum here appears to, well, kinda. If we bottom in this year, if we bottom down here, this will turn light red. And we are coming to an apex. Yes. Okay, so let me show you what I'm talking about. I'm gonna remove some things to make it very clear. Okay, so the apex here. Well, I want to make this purple to just kind of differentiate. So it has left the resistance. Basically, this next run, apologies, this next run is basically going to create the next level of resistance up here. So we're going to have resistance at 297, 450, and about 669. If it can break through all of these, which, I mean, this Fibonacci fan, it's not a Fibonacci fan. I call it a Fibonacci fan. Let's just look at it really quick. It's almost a Fibonacci fan. These levels have gone and bottomed all the way. So this, in my opinion, is ready for a new cyclical run. The company, maybe they're not disruptive to a new industry or to legacy products, but at these prices with their offerings and the current cash they have and how much money they make in a year, I think these are great. This is a great acquisition target. It just hit the bottom all time on the stock. A little bit more research needs to be done into the CEO and that director who's been buying. I'm going to leave that to you guys to do on your own, unless you specifically want a whole video dedicated to AWRE software. Let me know. Otherwise, do it on your own. I might be buying. We'll find out next week. Let's move on to the next stock. All right, the next stock that we have on our list is ticker symbol CRIS, CRIS. I don't know what this is. It is a biotech company. Do they have sales? They do, but they're losing. They make 10 million but lose 59 million. They have 90 million shares float. That means each share is worth 9 cents. I mean, if we're just doing simple math, you make 10 million a year, but there's 90 million shares available. Not really appetizing in terms of an investment. I don't know what drug they are creating, but let's just look at the monthly chart. This company was almost $30 at one point and has bottomed down to 65 cents. They have a lot of cash. Their gross margin is 96%. Okay, this seems very sketch. Institutions are selling a little bit, but they own about 39% of the company, it appears. Um, hmm. I am sketchy. Let's see how much cash they have. They're losing $59 million a year. How long can they do that? They're only going to make 20% EPS growth next year and 20% this year, 7% next year. But again, I'm reading Finviz data points, so these are probably older. So it looks like they'll probably make 7%, 7 to 10% this year is what they guided. Okay. So yeah, this is basically the stock is only going to rise off of material events, which is not sustainable. President and CEO sold at $3. They barely have a stake in the company. They own 64,000 shares. They sold 5%. No, more than that. A little under 10%. Oh, this was last year, 2022. So, um, they only have 40 million in cash, so they're going to be out of money. They're going to need to get money from somewhere, and it's going to be retail investors like you and me. We're not going to let that happen, so we're going to stay away from this. Let's move on to the next one. All right, the next stock we are looking at is ticker symbol EYPT. I think this is another biotech. Eyepoint Pharmaceuticals. Again, they make 42 million, but they lose 78 million. Oh, cringe. Earnings per share is 42%. That's pretty good. 30 million shares available. So I mean this, if we're excluding income, if we're just looking at sales, this is around a $1 stock. Institutions own 89%. I don't know if it's 89% of the company. I'm gonna have to double check this institutional ownership definition. But I'm not liking this at the moment. 81% gross margins, but I mean, let's just take a peek. So they lose 78 million a year. If they have $7 billion in cash, I'll be okay with that. So, I mean, their revenue is going up. 34 million in 2020, 36 in 2021, 42 in 2022. That's pretty good. Gross profit, again, that's just reflecting because it's going up. Nobody is selling, which is fine. CEO has 150,000 shares. Okay. Okay, balance sheet, they better have $1 billion. They don't. They have $178 million, 263 million in assets, 79 in liabilities. So 8, 16, 24. 3 assets dwarf liabilities by 3. Oh, that debt. They're paying down their debt, which is good for them, but good Lord. They're not, I mean, they're paying it off slowly. I don't really see them getting out of the hole unless they get a partnership or they expand or something that is going to explode their sales. And I'm not familiar with their drugs. Let me just look actually. So, pharmaceutical company commercializing ophthalmic products for the treatment of eye diseases in the US, China, and UK. Okay, the company has strategic collaborations with Alimera Sciences, ticker symbol ALIM. I know that one. A commercial alliance with Imprism RX. Okay, so I mean they need more partnerships. They need to expand. I don't know what. Let's look at their website. Let's see if they are hiring salespeople. Let's just take a peek. I don't know why I'm entertaining this, but I think it's because they have manageable debt. Their EPS is okay. They're guiding lower EPS next year, but that could just be for as a precautionary thing, just because the markets. So careers, we want to see salespeople. And we'll take a look at this in Thinkorswim as well. We'll look at the long-term momentum. Okay, so let's look at all. Search all. Director, manager, formulation scientist. Not any sales. What they do though is sometimes they'll have sales positions not directly on their career site. So let's do this. Eyepoint Pharmaceuticals careers. Here we go. 15 more jobs near Las Vegas. That's where I'm at, but let's go to Indeed. Indeed. Come on, man. So Indeed might show us prior positions as well. Yeah. 3 jobs. So it doesn't look like they have any sales positions open, which is kind of a bummer. I don't know how many salespeople they have currently, but I need to see some expansion here. Use some of that cash for expansion. Let's look at Thinkorswim really quick. EYPT. Oh man, they did a stock split and it's only gone down. So let's clear drawing set. Let's look at long-term momentum, and this is going to cause my computer to freeze. Okay. So long-term momentum is going to be on this area here. So I'm just going to. So let's see if we can find a pattern. I mean, so every time a long-term momentum swings from red to green, historically, there's been good price action. Let's just kind of do some quick analysis. So, I mean, this was not really that good. So it went from to $35 from, okay, $2. That's pretty good. That's a 10,000 per or 1,000% move. Part of my language, 1,000% move from this crossover here. Then we have this this is going to be a multi-year downward move. So the bottom is going to be like right here, which is around 889. And the high is going to be right here at 53.48. That is going to be not a 1,000% move, but a pretty good one. Then we have another multi-year downtrend with the low being around here, which is $10. Then we see the high go to about 38. So the returns are getting less and less, and this is basically creating pressure, long-term pressure. So we're gonna see, you can see my face. So we're gonna have big spike as the first one, medium spike as the second, and then a small spike as the third. New cycle. And then let's go here. You can still see my screen. Yep. So the low is gonna be around low is 365, and the high is gonna be 1213, 1248. So that's pretty good run, but I mean it's kind of risky, but looking at the long-term momentum can kind of be a good indicator. So every time it went up on these huge spikes, there was multi-year downtrends. So right here, you can kind of see this was down for several years. This uptrend appeared for several years. This downtrend, again, March 2011 to about March 2013. Another multi-year downtrend. And then we're at this downtrend now, which if history repeats itself, it's going to be multi-year. But we are seeing those spikes get less volatile, which is building pressure. I'm not the only one who notices, because look at this candle here. Huge buy or buys This was a $38 million share candlestick before it goes back to 2 to 6 million. Now, this is going to be our deciding factor here is the yearly momentum. And let's take a peek. It has been only going down. I'm not really noticing a pattern on the monthly or the yearly. We have it's kind of left shoulder head, no right shoulder, no nothing. We do have this indicator here that does signify that the price is going to be going up, which is this basically, showing that a move is curling up. So this is really hard. We're going to look at the weekly, which is another long-term indicator. Look at the weekly. Here we go. Look at this. Weekly is showing a curl, a long curl up right here. And it bottomed at 219 and it's already at 316. It did get as high as about 378. So, I mean, it's reversing, but again, given the history of this stock and where it's at now, it's very speculative. There are sales, but I'm just not seeing any pattern or anything to overturn this as a buy. What I also do see here is looks like an inverted cup and handle. So here is our cup. Let me just remove the studies. Remove studies. So we have our cup here. And then we're going to have a spike. Whoops. We'll have a spike. And then we're going to go down further, which is going to be under the $1 basically. Let's look just one more time at the monthly. I want to kind of look at a clean example. I just want to see if things are happening for a reason or manipulation. 219, right about here. I mean, this does not look really clean, in my opinion. Yeah, I mean, I'm gonna say let's check back in on this stock. Um, yeah. I mean, it's kind of doing a throwback here. It's gonna dip. This is gonna be a throwback under here, and then a rip. So, you know what? This is a bullish. This is a descending wedge, I believe. It's not a real clean one, and it's not something I normally would like. But I'm just looking at the throwback. If we can catch the throwback and the company, it's not going to go negative. So, yeah, this one, let's watch this at, I'm going to go here. I chose this line because we have the bottom here, support, I'm sorry, support, 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 resistance, 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 support. So let's watch this. Again, this is showing negative, which is kind of annoying. I want to see something coming down here. This whole area is this is like the apex where there's going to be a lot of deciding stuff going on. And the company really could turn it around quickly with just one partnership. So, We're going to remove this from our list, but I do like this as a long-term watcher. Just to watch to see how the company grows their income, gets out of debt, and moves forward. I think the company looks pretty good, the website, the products. So yeah, I don't know what this is supposed to be. Maybe a before and after. Looks dark and bright. I don't know. Could be just Photoshop as well. We never know. So EYPT, it's going to be a no, but close. So let's check out the next stock. So we're going to check out the next four here. Hey guys, if you've made it this far, please consider subscribing to my channel and hitting the like button. It will let YouTube know that I'm sharing somewhat helpful information. Let's continue on. All right, so the next stock we are looking at is going to be ticker symbol FTEK. FTEK. This looks like Fuel Tech Inc. Looks like it had a huge move on Friday, 13% move. Let's just kind of expand our thing here. I thought I saw something. Nope, okay. So looks like it is potentially starting a breakout move. Very nice. Let's just do some quick math here to see what's going on. They make 26 million, they lose 1.3, so 25.1 million a year basically. Huge quick ratio, a lot of cash or something, a lot of investments. Earnings per share this year 100%, next year 100%, which is this year presumably. Gross margins 45%, smooth. Institutions are still buying. Shares available are 23 million. So this is, if we're just looking at sales to shares flow, it's about a $1 stock. Trading at 168, a little bit of a premium there. Nothing really jumps out at me here except for the quick ratio. Let's go see how much cash they have. And what type of pollution products do they have? Okay, so just really, okay, so the CEO bought 23,000 shares worth. That's not very impressive, but the CEO does own 329,000 shares, which is kind of cool. It's a good amount. So revenue is increasing. Cost of revenue also increasing. Gross profits resulting in growth as well. Operating expenses are going up compared to last year. Net income's negative, which is not good. What's the big thing here? Nothing really out of the ordinary, honestly. Let's look at the balance sheet. They do have a high quick ratio. This have 35 million, up from 10 million. So current assets are 41, total liabilities 3.7. That is a 10x. Assets dwarf liabilities by 10x. This seems like a no-brainer of a stock to potentially be watching. It's a little expensive compared to sales. I mean, they have no debt. Employees just staying flat, basically. What's up with this company? So they provide boiler optimization, efficiency improvement, and air pollution reduction. Operates through two segments, air pollution control and fuel chem technology. The air pollution control tech offers technologies to reduce nitrous oxide emission in flue gas from boilers, incinerators, furnaces, and other stationary combustion sources by low and ultra low nitrous oxide burners. Over fire air systems, nitrous oxide out, and HERT selective non-catalytic reduction systems. Okay, so they have a lot of offerings for air pollution, air cleanliness. Let's look at the cash flow. Cash flow is king. Negatives. So, I mean, this company is on the right path to turning things around. Do I feel like we missed the move? A little bit. Stock's up over 100% in the last year from the low. Let's take a little peek at the website. Is this disruptive? Kind of. It depends on their air pollution products. I mean, their website just looks like there's little effort that was put in, but for engineering companies, it's kind of common, unfortunately. Let's see if they're doing a lot of hiring. They make 26 million a year. Okay. Do they have the right processes and procedures to scale? Let's look at Thinkorswim in a minute. Okay, so their hiring page looks to be the most up-to-date piece of software that they have on their site. Benefits, they have normal, nothing out of the ordinary. Again, products, just so many products. Air pollution control is a big one. I mean, this is one huge monstrous chart that looks ready for a turnaround. Okay, so they have engineers, accounting. My head's in the way, sorry. Nothing that stands out. Like yeah, current opening 66. Like sales, I want to see sales. I want to see them grow. I want to see them expand and scale. A lot of hiring for Illinois, Michigan, Illinois. They're a small shop. I'm gonna open Thinkorswim. Let's take a look at FTEK. This is an old chart I've done. Pretty accurate. You know, so just kind of speaking this into existence, but we have starting point, middle point, ending point, which is also the starting point. So let's just be fun. Let's have some fun here. So start to finish, or start of the cycle to the restart of the cycle. Boom. And then so this is first spike, largest spike. So it looks like the largest spike, if we're just going off of simple patterns, looks like potentially 2034. I want to look at the momentum. Let's check this out. Okay. Momentum looks pretty standard on the monthly chart. This was a huge, so from the all-time high and then whoosh. So momentum seems to be typical right here. Nothing too crazy. It hasn't been going down for years and years and years. It looks just like a shallow-ish momentum move, which is okay. It just doesn't really provide us much context in terms of what to expect. So the yearly, this is where I get excited, is if we have the yearly momentum turning around. Ooh, look at this. Last time the yearly momentum turned around, huge reversal. This was 1, 2, 3, 4, 5, 6, 7, 8, 9, whatever. Let's do it up here. from 1993 to the high being 2007. That is a 14-year turnaround. And over here, the low, okay, so 2012, and now give it a year or two. This looks good. I like this. I like this. I'm just hesitant because this can be driven down pretty easily by manipulation or shorts. We're already at the end of year tax selling, so I think that extra pressure is gone for 2022. I mean, they have no debt. If they want to grow substantially, they're going to have to make investments elsewhere. So they're going to have to use some of that cash, which I would not be opposed to. They need to use it in the correct way. So I like this. It's a hot company right now. Um, the momentum on the yearly is in their favor. Do I think 168 is fair? If I do end up wanting to hold this and it goes down to 36 cents, I mean, did they do a reverse split or anything? Doesn't look like it. No reverse split. It went down to as low as 30. It went as low as 30 cents and it reversed, which is insane. And it had a 391 million share traded month. Holy cow, when was that? Oh, it must have been a pump or something. So the low was 70 cents and the high in 1 month was $7. That's 1000% in 1 month. Holy moly. Let's just look at hedge fund ownership really quick. And we're going to look at FTEK. Let's look at the chart of holding. So it's 6.9 million in hedge funds holding. And if we look here on this right chart right here, it's nothing too crazy. Renaissance Technologies has a huge position. No, but they sold half off, basically. I take that back. They do not have a huge position. SX Investment Management's been buying a lot everywhere. I mean, this company, it's kind of overpriced, but with the cash that they have on hand, which is, let me just recalculate. The cash they have on hand is 35 million. That's double. No, that's more than they make in a year. So, gosh, I mean, I like this company. Shares float to sales is almost 1. Do I feel like it's a little overpriced? I do. I'm torn on it. Just because I know they're going to need to expand. They're going to have to do an offering of some sort. I mean, they have cash reserves to expand, but I'm just hesitant. And if I do hold this one for multi-years, the momentum is turning on the yearly, so I would feel okay. I would feel okay holding the bag for a year. Let's just look at the daily and see where we could find a good entry here. Okay. So again, here it just kind of pumped. I mean, it's pumping still. So it's a little too hot at the moment, but there's going to be better times to add. So yeah, this one's nuts. So let's put this one on the back burner and we'll revisit this in a few months. And this is FTEK. This is worth investing in now if you're okay with holding as it goes up and down, up and down, up and down. The benefit is you will enter long-term capital gains. However, the cons could be maybe they dilute on some of these runs to pull some more money into the company to expand. So just a heads up. But I mean, given their sales and what's going on in the world in terms of air pollution, I think this company is poised to do well. I don't know if any of their technology is disrupting, or I'm sorry, their products. So this one is a back burner. I would like to get in. I would like to get it in around. Yeah, it's a little hot on the weekly too. It's too hot. I want to get in around. Let's extend to the right. Closer to $1. This will come down. So around $1 to $1.20 is what I want to get in at. And I don't know if that's me being greedy and missing out or what. I mean, it kind of is. No, I think that's fair. I mean, we're in a pretty rough market right now. This is pumping. This is manipulation. Yeah, we'll wait on this one. But I mean, if it's it's totally valid to hold for a year or two, especially if you want to enter long-term cap gains and then get out next year on the next volatile move. So yeah, I like this one. We'll put it on the watch list. Yeah, we'll put it on the watch list. Okay, so the next stock, all right, the next stock is ticker symbol GLBS, which is shipping. So shipping container companies are very volatile and very sensitive to macro environments. If you guys remember the whole health crisis and all the shipping delays, the supply chain issues. So, yeah, just a heads up there. I just want to look at the chart on a bigger picture to see if this is been manipulated or not manipulated, diluted. Okay, it's been pretty diluted. The stock price used to be 55,000. Now it is $1. So that kind of tells us everything we need to know. But I mean, looking at these numbers, the numbers actually look really good. They do 72 million in sales with 37 million income. That's about 100 million. Shares float is 17 million, so about a $4 stock here. And I'm just doing 100 million divided by 20. So it's a $4 or $5 stock. Institutions own, or insiders own a bit. Institutions own a little bit. Earnings per share this year 105. Next year it looks like they're pricing in inflation coming down and supply chain improving. Sales past 5 years look really good. Gross margins high, operating margins high, profit margins are high. I mean, this doesn't sound like, just looking at this without, the history looks pretty good. Let's go down. Okay. So look at that. Well, okay, so 2020 they had 11 million in revenue, 2021 43, 2022 72 million. Gross profit nice. Net income growing significantly. Almost 100% year over year. No, over 100% year over year. Negative 17 to positive 14, 14 to 37, that's over 100%. Unusual expense, nothing. Okay. Let's see how much cash. No cash, but they do have cash and short-term investments here, which is probably investments, which is probably like their ships or something. Total assets 185. Total liabilities about 40. So it's assets dwarf liabilities almost 5x. Long-term debt 26 mil, 32 mil. This honestly doesn't look too bad. Property, plant. I mean, they have a lot of money invested in there. equipment, ships, and everything needed for that. So owns and operates and manages a fleet of dry bulk vessels, transport iron ore, coal, grain, steel, cement, a bunch of other stuff. Okay, so it's based in Greece, a subsidiary of Ferment Trading. So the numbers don't look too bad. I'm gonna entertain this. There's nothing really showing for craziness here. I'm just gonna do a quick scan for offering or dilution offer. Yep, so they announced $12 million offering in 2020. It's a little early. Let's just look at it. What they need that money for? So they did offering of 1.2 million shares. The proceeds were 12 million. This was a shelf registration, okay. There's nothing about what they're going to do with that money. I mean, it was based off earlier filings, but there's no. Here's another $30 million one. Closing of a loan, that's good. They're just, they keep doing all these offerings. So are they getting income from their offerings is what I'm kind of putting together here. So has successfully closed the refinance of the 6 vessels. Cool. The majority of proceeds which were used to repay the company's loan facility. Okay. We are pleased that we have managed to refinance our fleet by not only being able to extend the maturity of the loan, but also by reducing the margin of our existing loan from 8.5 to 3.7. Good for them. In 2021, we expect to save approximately 1.5 million. That's, I mean, it is a lot. So upon the completion of this transaction, our bank debt stands around 34 million compared to our total assets around 144 million. So they have the assets. So they have the money. That's good information. Next article. Okay, so they use the money from this offering to buy a dry bulk carrier. I'm glad they said something. Okay, so they use this money to buy another ship. Good for them. So what I want to know now, we are very pleased to announce yet another successful offering. Oh man, off the backs of shareholders like you and I. That's so annoying. But I mean, the company's just banging. Like they're doing what they have to do to grow their company. So let's see another $50 million offering. These guys are nuts. Let's see what's going on here. Entered a securities purchase agreement with certain unaffiliated to issue 10 million shares. Oh, is this a private placement? No, this is registered direct offering. $5 a share. The gross proceeds from the offering to be 50 million. What are they going to do with it? No information. So the company is continuing to dilute. I mean, they're going. I mean, this is what a growing company should do. What I want to see is I want to see insiders buying. Once I see insiders buying, that means they're probably done diluting, and I'm not seeing that. Um, let's just I'm entertaining this for I don't know why. Let's just see GLBS. I'm on the weekly. Let's go to the monthly. Okay, so looks pretty grim. A lot of selling. Huge, ugly chart. Sorry, it's like so sensitive. Let's just look here. So, we're not going to invest in this, but it has reached the bottom. The yearly is turning around. So, gosh, I mean, I want to see this company do some great things because they've taken a lot of money from shareholders. Let's look at their website and let's see how many institutions are holding, hedge funds, whatever. 1 million. How pathetic. Who's holding? Armistice Capital. Wow, these are all big owners. Yeah. Nobody. JP Morgan Chase bought some. Barely anything. Yeah. This looks like a pass, man. Yeah, we can't open the website. I mean, I want to see them do good based off of the money they're taking from people, but at the same time, we want to see insiders purchase. I want to see a huge $1 million purchase to, you know, provide, I guess, comfort in possibly owning this. But I mean, I don't think I've touched this with a 10-foot pole, honestly. So on to the next. All right, the next company stock we're looking at is ticker symbol HUSA, which is Houston American Energy Company. Corporation, I'm sorry. Let's just look at the bigger picture here before we move on. I just want to see what we're looking like. Ooh, fallen from grace. They only do 1.7 million in sales. Ugh. 2 employees. I mean, honestly, they have good sales for the past 5 years. Gross margins are high. This stock should be under $1, well under $1. Looks like it's only gone up based off material events, which is whatever. Yeah, we have some big selling going on. Not from the CEO, really. The CEO only sold like a little bit, which probably could be for tax purposes. Looking at their net income, it's improving. Total revenue is growing pretty organically. Their balance sheet, they have 10 million in assets, 0.42 in liabilities. That's pretty good. I mean, this just no. This just kind of looks I don't know. I just can't wrap my head around this. A million in sales, but they lose 1.7 million in sales, but they lose zero point 0.9 in their income. So we're just gonna have to pass on this one. Looks like a good pump and dump opportunity for people who are into that, but we're looking for something to get into that could be crazy and crazy in a good way. So next stock. All right, the next stock we're looking at is ticker symbol OIIM. Looking at this chart, it looks like right here they might have been bought out or something. Why? Let's see. Okay, they agree to be bought out for $5 a share. So again, let's see why they were bought out. They had no debt. They had a bunch of cash. They had sales under 100 million. What else? Gross margins were 53%. Earnings per share were very positive. Historically, very positive for the past 5 years in terms of shares, or I'm sorry, in terms of sales. Um, Again, these companies all are undervalued and can be bought out any day now. So I'm not surprised here. Let's look at the chart and just see if this maybe was starting a new cycle. Oh man, huge cup and handle almost. Can they terminate this agreement? I don't know. Man, let's look at their balance sheet real quick. They don't have it. Okay, that's sketchy. If they didn't have that, we would have had to do a deeper dive. So, OIIM, cool company it looks like. They got bought out. Let's move on to the next one. All right, the next company we're looking at is ticker symbol PXLW. Pixelworks. They are semiconductors and they've had a nice little run here. Look at this is a descending wedge and a breakout here. Typically it comes back down though to around $1.30. So let's see if we're interested in potentially looking at this one. So they make 69 million, but they lose 17 million. That puts them about well under no 50, around $52 million a year. They own $52 million, or let me just do the math so I can coherently describe what I'm trying to say. So they make 69.8, but they lose 17.4, which is going to put them at 52.4 million in sales after paying off their income, which is likely debt or other costs of running their business. And if we divide the 52.4 million by the shares float, it should give us around $1. So just noting that there, but they also have quick ratio of 5, meaning they have some cash that I'm not really accounting for, but that I should be. Sales over the past 5 years have been positive. Institutions have been selling, insiders have been selling. Let's see what this company does. So it looks like they do semiconductors and software solutions for mobile, home entertainment, content, business, education, kind of all over the place. Okay, so the company sells its through a direct sales force, distributed manufacturers, representatives Japan, China, Taiwan, US, Europe, Korea. Pixelworks is based in Portland, Oregon. That's where I'm from. Very cool. Okay, so revenue is growing. 2020 was 40 million, 2021 55 million, and 2022 70 million. So it's going up about 15 million a year. They are paying for that to go up naturally. Operating expenses are going up though, which is not good. It's a write-off, but we want to see that go down. Net income's coming down. It's getting closer to break even, which is good, but a long way to go. A lot of selling, but let's look at the bigger picture. So the CFO, Aman. So Aman has sold 3,000, 4,000, about 5,000, 6,000 shares, and he owns about 189,000 shares. So that's not even, that's not a lot. If we're looking at the bigger picture, Todd DeBonis has sold a lot, 58,000 plus 24,000. So that's 82,000, a little bit over 100,000. Less than 10% of the shares that he owns, but doesn't really give us confidence in the company. So there's that. Let's look at the website. Again, semiconductors for all these different types of products. Nothing too crazy here. Very simplified website. Are they hiring for salespeople? I don't know. They don't even have a careers page. Let's just see here. I mean, PXLW. Pixelworks careers. Let's see if they have something offsite. Maybe they go through a contract company. Okay, institutions, hedge funds, etc. 22 million. Chart showing a little bit of a decline here. Let's look at the big owners. Vanguard sold about 20%. A lot of interest from ETFs and smaller companies, hedge funds, Fidelity, a lot of sells. A lot of people sold though right before the new year. A lot of tax loss harvesting. So that's kind of normal. They have a no guidance for next year, which is fine. Oh yeah, how much cash did they have? I don't remember if I noted that. Oops. 61 million cash. So they have the money to do things. Semiconductors, I mean, their stock should be around $1. They're not disrupting anything. Let's look at momentum. PXLW. We're looking at the yearly chart. So it looks like the yearly is showing that it's cooling down. So the yearly is cooling down. Let's check the monthly. Need to grab my water. Monthly shows reversal. Yes. Okay, monthly shows a bottom reversal in process. It's $1.82 now. It needs to break this support. So it's definitely going to go for 252. It's going to try and touch its head on 252, and we'll see probably some resistance. A lot of money is going to be taken off the table at 252. But will it be overvalued at 252? Yeah. I'm sorry, how much? They had 57 million in cash? 61. Okay. No, they will not be. They will be. Because this is $1. The stock's worth about $1 right now, based off sales to shares. And it just did a breakout here. Man, this, I mean, we're looking for disruptors, and I don't know if this one's really a disruptor. It's kind of, let's get rid of the studies really quick and look at a cleaner chart. All right, here's a cleaner version. So yeah, I mean this, whoops, let's do some quick charting really quick together. I just want a better picture of what's kind of going on here. All right, we have, I can't really stretch it that way. I think it's going to be right around here. We could bring it to like right. Yeah, this is a good spot. Yeah, okay. So every time it's bounced off of the bottom of this support, right here, it's ran 36 cents up to $5, 1,000% move. $1.50 to $7, not a 1,000% move. And then here about $2.13 to about $7.88. Now it's deepening, kind of fell through. As people want to do extra tax loss harvesting for this year. Let's go all the way back. $51 a share is what it used to be. 51.75. We'll call this good. It's kind of sloppy. About there. There we go. Okay, so it's going to test here, and then it's going to try and break this. And it's going to run into this long-term resistance here. So the stock has priced in. So what we can see here, the stock has priced this in already. So as you can see, this is an expected move. And we do have resistance a lot pretty built up, like right here. Yep, look at this, you guys. Let's make this differentiated from... Okay, so we know this, I chose this channel because, let me just, you have a good vision right there. So here we have resistance, and now it's acting as support, resistance, broke through, acting as support. Now this is support, resistance, support, resistance, support, resistance, support, breaks through, resistance. So we are coming to a big apex right here. And I want to own this. I'm sorry. If you wanted to own this now, you'd want to get it for long-term capital gains. Because this time next year is going to be over here. And it could be down to $1, which is fairly priced at what it's at. And let's just bring this, look at this channel. This is what I love about technical analysis. So I've brought this channel to the left. Let's see how it lines up with other candles. Look at here, resistance, support, resistance, support, resistance, support, resistance, support, resistance. This move has been in the making for a long time. So I like this. I don't think the company is revolutionary, but I think it's going to be coming to it's going to break the cycle, essentially. Look how back it goes all the way back to the very beginning. Look at this. Let me zoom in. Support, 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 resistance, supports. This is crazy. All right, I like this. It's coming to a boom or bust. I want to own this now because next year at this time, there's a good chance we will be at $3 or we will be trying to finagle 250 mark. And we'll be at long-term capital gains. And I think we'll be in a good place to sell. We've fallen out of this channel, which I'm going to make a little bold. So this is the long-term positive channel. This is how many years is this? This is the year 2000. This is a 23-year channel. The stock is still respecting a 23-year channel. This is amazing. This is what I love about stocks. So again, not a revolutionary company, but if they can get their poop in a group, this is going to be a good outcome. And so I'm going to add this to the watch list. I want to buy. I'm going to be chasing a little bit. I think I want to buy next week. I just want to buy a little bit. You know, we never want to go too full in because maybe they announce expansion or something that involves diluting shareholders, which isn't a bad thing normally. It could be used to improve the company. So I like this. It's on a long-term breakout. We want to see how it reacts to the 200-day moving average right here. So this is going on the watch list. I like this one. The thing that makes this unique is the pattern setup. So my top companies are AWRE and PXLW. Let's move on to the next one. All right, the next stock we have is RVP, ticker symbol RVP, which is Retractable Technologies Inc. Just want to look at the bigger picture here before we dive in. I do own some of this company. It's a long-term building position. I'll show you why. So let's just look at high-level data here. So they make 141 with income of 30 million. Quick ratio is 4.9. They have just a little debt. Earnings per share this year is 100%. Earnings per share the past 5 years has been 66%. Sales have been 44%. This goes to show that this company has been performing at a high caliber and I believe could be undervalued. And maybe the CEO also thinks that as well, if you're familiar with what's been going on with this company. Institutions own 19%, I believe. I need to just confirm how they are calculating this institutional ownership on Finviz. There are 14.9 million shares available. If we do some quick math, we do sales plus income, so 141.6 plus 30.1 divided by 14.96. We get $11. So this is undervalued in my opinion, but we do want to be cognizant of macroeconomics here and what the company does because it is very trend specific based off of the health crisis that we had a year ago too. Maybe it's going on still, depending on who you ask, but yeah, very niche products. They are revolutionizing what I believe is the needle. I think this company is in line with Enphase in terms of stock performance over the next 1 to 5 years. Again, this company is enhancing, improving making the needle, a legacy product, more safer. You know, uh, what am I trying to say? Illnesses, there's going to be more variants. There's going to be a lot more focus from people like me or other people who are going to need or want more vaccines. Here you go. Perfect setup on the macro there. And some extra credit if you wanted to do is look at this company for a case study. Look at several other companies that had similar setups during the health crisis. By doing that, you can kind of get a gauge on looking at the pattern in the stock action setup for those, and also kind of run them side by side to see if kind of they're running and performing in lockstep, and if they're kind of having the same pattern essentially. So if let's say Moderna or Pfizer, whatever type of vaccine distributor is entering a bullish setup like we saw in 2020, is there going to be a bearish setup for 2 years, 1 year? Are we expecting, can we see like a huge momentum shift? Are we getting volume spikes for future months? You know, just being cognizant and aware of future price action to kind of help us make the decision on if this company is worth investing in. So let's scroll down here really quick. Insider selling 88%. Let's just take a peek. Take a peek. So let's look at insider selling first. This will be easy. So it looks like these Leonard Braden Michael, he was accumulating for quite a bit of time, and then he sold off tons of his shares at the bottom. Embarrassing. That's a bummer for him, but now there's 3 million extra shares in the market. Let's look at net income. We can see it's kind of all over the place. 24 mil here in 2020, 56 million in 2021, 30 million in 2022. Revenue is, again, 2020 was 81, 2021 was 188 million, and 2022 141 million. So 2022 is much better than 2021 or 2020, sorry. Gross profit just staying positive, but again, it's showing up as all over the place based off of the revenues. Let's look at their cash and assets and debt and all that fun stuff. They have 29 million in cash. And again, these numbers are old, so do not hate me if you see that I'm reporting out on older data. I'm going off of Finviz, so just chill out. Total assets, 104 million in assets. That's amazing. I'm sorry. Total assets is 206 million. Total liabilities, 107 million. So assets dwarf liabilities, not quite by two. But as we can see, long-term debt, looks like they have 1.8 million in long-term debt, but they also have 70 million in other liabilities. I would look into those. You know, companies that have these like liabilities or debt is because they are expanding. So do some research there. Again, I do want to position this company. I do plan to add more, but I'm also waiting for the price to come down a little bit. So let's see. I wanted to go back up here for a reason. I don't know why I'm back up here. Oh yeah, so the sales, we should see the sales decline. They didn't give any guidance here because it's hard to guide on what new variants are coming out and how vaccine predictions can go, but smart on their part, but we do anticipate that it's not going to be as much of a demand as it was in 2021. So I think we'll see less than 141 million in sales in 2023. But again, we could have a black swan event, and you know, that would help them. I think the absolute bottom threshold that we could see sales go to and still have a healthy stock price would be um, basically 20, no, around 30 to 60 million for the year. 30 to 60 million for the year, and if shares float stay where they are and the company does not dilute shareholders to get some cash to expand, this company is looking really good. They are revolutionizing the needle. I don't want to say revolutionizing, but they are enhancing a legacy product. That's kind of the whole reason for looking at these companies. So again, this company is going up with AWRE and PXLW RVP. I do want a position. And yeah, well, let's move on to the next stock. I was just kidding. I want to show you guys RVP and Thinkorswim because I want to show you when I think the next cycle is coming for RVP, not RVT, RVP. Oh my gosh, RVP, yes. Okay, so RVP had its huge spike up to $21 and it has now come back down. I could see it getting back to around $1 based off of historical patterns. We can see there is long-term support from 2009 that has been well respected. I think we are building a bear flag on the monthly. I do think the current stock price is cheap, and I think holding for years to come could be advantageous. However, it is one of those situations where um, it's a buy at your own risk and how you feel about price movement and how much patience you have. So again, this is kind of my little chart here. What I foresee happening is a capitulation move where this goes down to possibly $1.16, maybe less, has huge accumulation, and then it starts its next move up. And I would expect the next move up to be over at least $11, but I do see this going to 30 in the long term. And let me see if I have a chart to show what I'm talking about. So this is kind of the chart. It's a super mess, but basically, these cycles here, these are Fibonacci arcs, I believe, represent spikes. So this is 2001, this is 2021. So every 20 years, this has huge spike. So right here, we could see the price getting to around $28, $30. Again, I have no idea if it ever will. This is all just based off of historical patterns. The company could go bunk. We never know. So just kind of waiting and seeing how this plays out. There are several other supports and resistances on this chart right here specifically. We do have, this is a secondary support line that goes all the way back to 2001 as well. That has been well respected over the past, whatever, last 13 years. So it acted as support, resistance, support, and now it's acting as support again. Will it hold here or will it fall? That's the $1 million question. I think what we could see here is an inverted head and shoulders. So we have left shoulder here, have the head here, and then we have the building of the right shoulder and a reversal. Just my opinion. We never know what's going to happen, but yeah, I think this one's at a decent price, but I do know I do think we'll get to lower prices, which are going to be more buying opportunities. So let's move on to the next stock for real this time. The next stock we're looking at is ticker symbol SASI. This is an IT company, Sigma Additive Solutions Inc. 47 cents. They lose 9 million. They make 800,000. They have some cash. So let's look at that. Insiders are buying quite a bit. 10 million shares available. Yeah, this should be worth around 10 cents. Earnings per share this year, 58%, next year, 9%. EPS over the past 5 years, 35% is pretty good. And sales past 5 years have been positive. Gross margins, 43%. I'm interested. Let's look at the bigger picture real quick. Ooh, this company looks like it's probably diluted way too much. Um, Reverse splits, we will check. So it is a software company that provides in-process QA software to the additive manufacturing industry. It offers PrintRite 3D, integrated hardware software edge computing platform that combines inspection, feedback, data collection, and critical analysis. The company provides Print 3D direct energy deposition for metal parts and select laser sintering for polymer materials. It serves aerospace, defense, oil and gas, biomedical, and power generation industries. The company was formerly known as Sigma Labs, changed name to Sigma Additive Solutions. Okay, so looks like their revenue's all over the place, with 2022 being a pretty flat month. Insiders are buying a little bit, nothing worth or substance in my opinion. Cash assets, total assets 13.8, total liabilities 0.98. So let's just look at the website. What's this company all about? Um, PrintRite 3D, Sigma's next generation technology. Okay. Nothing too groundbreaking, honestly. They have a about page with careers. They have 33 employees. Um, just very interested in this. Okay, so their account executive. Um, okay. Yeah, nothing too groundbreaking about this company, honestly. They seem like way too, I don't know, they just seem like a startup. SASI. I mean, they had the name switch, that's why it's only showing this little part. So let's go here to here. Is this the bottom 3501? No, it's not, basically. So we're gonna pass on this company. Let's move on to the next one. All right, the last company we have on our list is ticker symbol VISL, which is Vislink Technologies. Let's just look at the bigger picture really quick. The monthly chart on Finviz, just to see what we're looking at. Oh my God, the stock price used to be $2 million. Now it's 58 cents. Okay, we have insiders buying, could be a turnaround in the company. Little bit of debt. So they make about 11 million a year, but they have 43 million shares float, meaning this company should be around 40 some cents. Is that 58 cents? Insiders have purchased, institutions have some. Um, just going on down to the bottom. Okay, look at these buys. These are pretty good. The CEO bought at 39 cents, 43 cents. all right before the new year. So the CEO owns 4.5 million shares. Good for them. Net income's getting further from break even. Revenue is slightly growing every year. Um, let's see what they got. They have some cash and short-term investment value going up. Is that because what did they invest in that brought it that high? It's a little of a red flag there. They have high inventory. What does this company do? Develops wireless communications. Okay. We'll look at the website in a second. Total assets 68, total liabilities 11, so it dwarfs it quite a bit. Let's just see what we got going on here. The website looks very minimal. Well, it's still loading actually. Minimal website. It's got sound coming from it, getting us hyped up. They still have 2022 at the bottom of their website. Oh my gosh, how many different sounds and songs are coming out of here? Do you guys hear this? There's like 2 or 3 songs coming from this website. I'm clicking the careers page to see what type of growth they're looking for here. That was kind of weird. All right, I clicked the careers page. Okay, so they have engineers, technicians, developers, and the developers are outside the US because they're cheaper. Okay. Honestly, this company's could be turning around, but let's check in Thinkorswim. Let's just check here. Let's just do some due diligence. Let's take a peek. I've charted this out before. So it looks like it's trying to make a climb back to 84 cents. They've done 2 reverse splits. Nope. 1, 2 reverse splits that I can see. I don't know about this other stuff up here, but pretty ugly. We're gonna pass on this one, unfortunately, but it could be turning around and could be a great investment idea opportunity, but just not for me. All right, if you've made it this far, we've gone through all 12 of the different stocks that I thought might be good opportunities. After reviewing each and every one of those, I think I've boiled it down to about 3 to 4 to maybe 5 stocks to watch. The most conviction stocks are ticker symbols AWRE, ticker symbol RVP, ticker symbol PXLW, and just keeping FTEK on the back burner. So that's about 4 stocks out of 12. I'd say 33% of the companies we looked at were worth, spending more time researching. Also, if you've made it this far and you've enjoyed this content, please subscribe to my content and like the video for the YouTube algorithm. It definitely helps me out. Hope you guys are having a wonderful day. I'll talk to you soon. Bye.